This Real Agriculture podcast is brought to you by Genesis Fertilizers. Nitrogen fertilizer is your farm's #1 expense. Farmers are working together through Genesis Fertilizers to solve the problem of high prices and security of supply by planning a state-of-the-art nitrogen plant. Security and earnings through ownership is the solution. Visit Genesis today at genesisfertilizers.com to learn more.
I'm Shaun Haney, and this is RealAg on the Weekend. Let's get real and get connected with the week that was in Canadian agriculture. RealAg on the Weekend starts now. Welcome to RealAg on the Weekend. I'm your host, Shaun Haney of RealAgriculture.com. Hope you had yourself a great week, a little bit warmer in Saskatchewan compared to last week. That wouldn't be hard. And even some plus temperatures being seen into parts of next week. So hope you had yourself a great week. Like I said, we got a great show for you here today on RealAg on the Weekend. Today, we're going to hear from Chuck Penner of LeftField Commodity Research, get a bit of an update from him on what's happening in those pulse markets. I was able to catch up with him at the Northern Pulse Growers meeting in Minot, North Dakota this week. We're also going to hear from Brent Derkatch of Canterra Seeds. Now, Canterra has announced a continuation of their partnership with the Saskatchewan Junior Hockey League, and they're going to be profiling players in that league that grew up on farms in Saskatchewan. So we're going to hear about that. We've also got a bit of a fertilizer market update from Bishop of ADM, and we're hoping that maybe even we'll sneak Kelvin Heppner from RealAgriculture into the back end of the show here today too. We'll have to twist his arm and maybe just sort of give a bit of a shove. So if you have any feedback on today's show, you can send me an email, shaney@realagriculture.com. You can find us across all the different social media platforms. You can also call the RealAg feedback line. The number is 855-776-6147. And if you don't get our daily emails that come out that basically keep you informed of what the issues are that are impacting your farm business on a daily basis, our emails are free. And if you don't get them, it's pretty easy to subscribe. All you got to do is go to realagriculture.com/subscribe. Let's hear what Chuck Penner had to say this week about the pulse markets as we get a little bit closer to planting time. How would you describe demand? Is demand strong right now? Are China and India coming through? Just give us a brief overview.
Well, it is interesting. I mean, of course, as always, it goes crop by crop and subcrop by subcrop and all of that kind of stuff. But yeah, I would say pulses are in a good spot. We developed something a few weeks ago we released it a few weeks ago. It's called the Market Strength Scorecard. So it takes all the different crops and looks at things like seasonality and momentum and historic price strength and then fundamentals. And so it's a composite score. And basically, all of the pulses are toward the top compared to things like canola and spring wheat and those kind of things. So there aren't any. I mean, there are a little better and a little worse, but for the most part, pulses are the strongest scores out there right now.
What's driving that? Has it been the dry bias through the northern plains and Western Canada? Is that really the driver? Concern about supply?
Well, it is a big part. We had a drop in acreage of peas and lentils last year, and then the yields were compromised as well too. So that's part of it. But for things like something like peas, all of a sudden, we had penciled India out of the picture for this year. And then as we were watching over the last number of months, pea prices in India started to move higher and then really move higher. And thought, okay, so there's a good chance that they're gonna drop this tariff, and that is in fact what happened. So you have it used to be in the old days it used to be India was the buyer, and then when they dropped out, China became the buyer. So we only had one major buyer at a time. Now we have two. And the only issue with India is that for now, that the deadline is of the zero tariff is March 31st. Right. But that could be extended. I'd probably put 50-50 odds on that being extended right now. So if it is, then suddenly they're going to be buying all for the rest of the year, and maybe even buying, and probably buying some new crop peas as well too. So that starts to change the whole new crop picture for peas, for yellow peas in particular.
Does India treat the U.S. and Canada the same, or talk about that a little bit?
On paper, yes. Part of it is you have historic trade relationships with individual companies, traders and companies and things like that. And so those are hard to break. The other thing about the U.S. market is that most of their export business for pulses has been, and I don't have an exact number or anything, but has been built around food aid and things like that. So these government tenders are a large part of the export business that they do. So I know I'm generalizing, but they seem to put less emphasis on regular export trade, whereas Canada, that's all that we have. So there's a bit of a difference in how they approach that, how the exporters, Canada and the U.S., approach the markets. I don't know that U.S. peas would be, or lentils would be looked down on or frowned upon in the Indian market, let's say.
Now we were just talking about lentils and peas. As we move into Montana, a lot of interest, of course, in chickpeas. What's that market been like?
Well, it's been a little quiet. The prices have been a little quieter than I would think. Export trade, Canadian exports of chickpeas have been very strong again this year. A lot of it is just cross-border trade, though, with the U.S. So the chickpea market, the Canadian chickpea market is closely tied to the U.S. So it's we do export to other countries, Pakistan and some other countries and things like that. But right now, it seems that it's mostly a North American market, and we're seeing prices in other countries though really take off. And so I think there's going to be continued really strong demand for chickpeas in the next little while. And I think that should be supportive for prices because we don't have a whole lot of them here again this year.
Yeah. It's interesting. As I've been talking to farmers, everyone recognizes, green peas and green lentils. That's the place to be. And if you've got some old crop hanging out in a bin and you've been just waiting for prices to be high, you have found your time. And if you're still sitting on them, not sure what you're doing. But hey, everybody can make those decisions. But in the sense, though, different than maybe say like a wheat or a canola, I think there's not as much willingness to say, hey, I'm going to jump into producing green peas because it's more difficult. And well, one, availability of seed is also a bit of a factor here. But what some producers have been saying to me is, yeah, like those guys that can do it and they want to do it and they want to take the risk, they can do it. I'm sticking with yellow peas. So we may not see the acre expansion that we would see necessarily in some other crops with some a crop like green peas.
Yeah, well, I think we will see acres go up. It's just
but it won't be explosive.
It's a matter of how much. I mean, you get these statements. Well, nobody's going to grow this, or everybody's going to grow this, and you know that those are exaggerations. And whatever. I think the seed supplies will be a real limit, and probably more so on the Canadian side of the border. Last year's pea and lentil crops in the U.S. were not bad, and so I think there might be a little bit more seed available south of the border. So, and even when I was down in Great Falls in November, people were already talking about boosting green lentil acres down there. So I think that's going to be the case again, or we'll see a further expansion in that. My concern is that those, of course, it all depends on the weather. But if we have an increase in acreage, a sizable increase in acreage, the size of those markets is pretty fixed. So you can actually fairly easily overproduce for things like green peas, especially green lentils. You can sometimes get a bunch more going to India, but otherwise the rest of that market is fairly fixed. So in my mind, it's fine if you want to grow them, but I would be getting a good chunk of them priced essentially, just because the new crop bids are, I think I was just looking this morning in Canada, they're mid-50s for both small greens and large green lentils. So, they're not the 70s, which are record prices, but mid-50s is quite something.
It's pretty good. And I've the last couple of years traveled a lot through Montana and North Dakota, and there's a lot of interest in expanding pulse acres. Growers look in those two states north of the border and they say, hey, look at the opportunity this has provided the Western Canadian grower. Why not here? A lot of same weather patterns, soil types. There's an opportunity there. What's your message today to the delegates at the Northern Pulse Grower meeting?
Yeah, for sure. I would say again, I think that's great. I think we can continue to grow those markets. but the part of it will be the marketing. And again, just getting back to a comment I made earlier about that a lot of it has been focused on food tenders, food aid tenders, and things like that. I think maybe the U.S. marketers will need to be more regular export focused, and then that will help grow some of those markets. And yeah, they'll compete with Canadian farmers, and that's all fine and good. I think that's we have North American markets in a whole bunch of different crops, and so it hasn't killed any other markets. So why wouldn't it do that for pulses?
Yeah, look at beef and pork is just one example for sure. Iron sharpens iron. Isn't that
Absolutely
how the saying goes? That was Chuck Penner of LeftField Commodity Research, based out of Winnipeg, Manitoba. We'll be right back here on RealAg on the weekend, 650 CKOM, 980 CGME.
If you're involved in the agriculture industry, it's important to stay informed on all the latest issues affecting your business. At RealAgriculture.com, we offer fast, reliable news, information, and insights to help you keep on top of all of the latest in Canadian agriculture. Visit RealAgriculture.com and sign up for our free daily newsletter covering everything from news, agronomy, animal agriculture, and much more. Visit RealAgriculture.com/subscribe today.
There's a reason we call it the Corn School. Videos on everything from planter setup to weed control, field trial results, and the latest yield strategies. The Corn School on RealAgriculture.com has the information and advice you need to help you succeed. Brought to you by Pride Seeds and BASF. Corn School episodes are available at cornschool.com, from RealAgriculture.com, or as a podcast in your favorite podcast app. Check out the latest Corn School episode today.
A great place to visit in February, it's Winnipeg. And if you're there, you want to go to the 2024 Crop Connect Conference. It's happening February 14th and the 15th at the Victoria Inn and Convention Center in Winnipeg. And you're going to see insightful speakers, crop-specific information, networking, and more. Register today at cropconnectconference.ca. It's over Valentine's Day, too. So you tell your spouse, hey, do I have a deal for you? Valentine's Day, we're going to go away on a trip. We're going to Winnipeg, and it's a farming conference. It's like all of the great things all wrapped up into 2 days. So please check it out. It is cropconnectconference.ca. This week I had a chance to talk to Brent Derkatch. He's the CEO at Canterra Seeds, and they are the lead sponsor of the Saskatchewan Junior Hockey League, the SJHL. I know many of you go to games out in your local community. And they're going to be extending that partnership, and they're going to be focusing and profiling some farm kids that play in the league. I had a chance to catch up with Brent this week, and here it is.
Yeah, so Canterra Seeds partnered with the Saskatchewan Junior Hockey League about a year and a half ago or so. So we're in our second hockey season now, and the partnership resulted in the creation of the Championship Cup of the Saskatchewan Junior Hockey League, being named the Canterra Seeds Cup. And so last spring was the first season that all of the players in the league were playing to hoist the Canterra Seeds Cup. And so now we're, around the halfway point, or just over the halfway point of season 2 of that partnership. And it's been absolutely fantastic.
Yeah,
love supporting those local Saskatchewan communities.
Yeah, we got a lot of listeners across the Ralco Radio Network here that I'm sure take in many of those games. So very, very important stuff. Okay, so this week, the announcement. What are you doing?
Yeah, so earlier this week, we announced another campaign or an extension of this partnership where we're going to be really highlighting and spotlighting some of the incredible players that were within the league, but the ones in particular that grew up in a farm and have a farming or agriculture background. We know, and I think a lot of people can relate to this. There's a lot of incredible skills and attitudes that come out of being raised on a family farm or being connected to agriculture, and a lot of that you can connect to leadership qualities and attributes that can be exhibited in any team sport, but in this one in particular through Saskatchewan Junior Hockey League players. So it's a nice little way for us to feature some of these leaders amongst the players in the league.
Yeah, and it's there's been a lot of hockey players that have gone on from not only the SJHL or other leagues where it's, the old adage of, the farm boy, right? And sort of that lunch bucket kind of mentality when it comes to how they play. What do you think it is? What is it about growing up on the farm that translates well to, say, a team sport with the physical kind of nature that hockey is?
Well, for starters, I grew up on a farm, as you know, Shaun, and so it's definitely there are attributes there that even I take within my current career and so on, and you in a similar background and growing up with those rural roots, if you will. A lot of it comes down to work ethic, and attitude that you take. Farming and agriculture is not an easy career. It's not an easy industry. You don't really have a choice but to develop resiliency in a lot of cases. You have to be able to deal with things that are entirely out of your control. The environment, Mother Nature has a lot to say on the success in agriculture. And so those just become ingrained in you as you grow up, experiencing the seasons of farming and agriculture. And a lot of that you now as an adult, you can relate back to as being really important life experiences, but just how you responded to those situations, you can really capitalize on those learnings as you get into your adult life and in your professional career.
I think there's an element too that's kind of like discipline, right? So, I was hosting the RealAg Radio podcast this week at a couple different events, and it was mentioned that it's kind of like the one guy grew up in a poultry operation, and it was the discipline of having to be in the barns every day, and he used when growing up, the Manitoba-based farmer said, my friends on Saturdays were sleeping in watching cartoons. I was going to the barn and helping my parents to make sure all the chores were done. I think there's an element of discipline that also fits into this narrative for sure.
Oh, absolutely there is. And just, knowing what it takes to work towards a desired outcome. When you're trying to produce a crop, you're putting in a lot of your blood, sweat, and tears, and you're making some pretty critical decisions along the way. But then you get to experience the harvest or the outcome of that effort. And it can be pretty rewarding. It could also be pretty humbling too at times. And I think all of those items are really important. I've been a minor hockey league coach with my kids' teams for about 10 years now. And, one of the sayings that I picked up from a good friend of mine who's also a coach is effort and attitude. Those are a couple of things that, you can control, first as young people, but as you also then mature and get along in your life, those are things that can still very much be something you can control and really can help, get you to the outcome that you're looking for.
Yeah, absolutely. So what are some of the ways that you're going to highlight and spotlight some of these Saskatchewan-based farmers that are now playing in the SJHL?
Yeah, so over a period of time, our team will work closely with the league. Kyle McIntyre and his team have been absolutely fantastic in connecting us to the individuals, and over a certain cadence of time, we'll be highlighting some of these individuals through some blog posts and some social media awareness and so on. So just one example that comes to mind is the captain of the Battlefords North Stars, Jake Southgate, grew up on a farm, still helps support the farm in the off season, and so players like that and many others will be highlighted. And the Saskatchewan Junior Hockey League, to their credit as well, has a strong desire to continue to promote the game, within the province, obviously, but more so as well to the players within the province, that they can actually stay and play in the province. And so this is there's definitely a win-win here to show some of these young and upcoming hockey players to, that there's a pathway to play some pretty exciting hockey within their home province.
When we come back on RealAg on the Weekend, we're going to talk about the fertilizer markets with Noah Bishop from ADM. You're listening to RealAg on the Weekend here on 650 CKOM, 980 CGME.
The Canola School on RealAgriculture.com is your one-stop shop for everything a canola grower needs. Check out our free video series on YouTube for all the latest in canola agronomy, research, marketing, and more. Don't have time to watch? Download the podcast version of the Canola School on RealAgriculture.com or anywhere you download your podcasts. Stay on top of all things canola with the Canola School on RealAgriculture.com, brought to you by BASF and Invigor Hybrid Canola.
The next generation is the future of agriculture, but how do we launch from one role to leading? From succession planning and family dynamics to understanding finances and making the tough calls to discovering paths others have taken all through agriculture, the Successors Podcast covers it all. Tune in with me, your host, Kara Oosterhuis, simply by searching The Successors on your favorite podcast platform, or you can find it by visiting www.realagriculture.com.
Whether you're seeding, harvesting, or anything in between, the Wheat School on RealAgriculture.com has you covered. Timely agronomic information from industry experts available online anytime. Give your wheat crop a good start and a great finish with the Wheat School on RealAgriculture.com. Brought to you by C&M Seeds, Syngenta Canada, and the Alberta Wheat and Barley Commission.
Deal with many uncertainties on your farm, managing risk should not be one of them. MMP's Ag team specializes in risk management. Visit mmp.ca to learn how you can stay ahead of the game and plan for the unknown. Go to mmp.ca. Well, as we get a little bit closer to springtime, still some considerations out there when it comes to the fertilizer markets. Kelvin Heppner of RealAgriculture had a chance to catch up with Noah Bishop of ADM to talk about what's happening in the fertilizer markets right now.
One of the pivotal issues that we've seen for the last 3 years has been European natural gas prices that have been elevating cost of production in Europe. Fortunately, we've seen precipitous declines in cost of natural gas in Europe that's at least abated that issue for the nearby. So the market's really turned its attention to other supply and demand factors, the key one being Indian purchasing habits. So at the beginning of the month, we saw an Indian purchase concluded. They purchased just over 650,000 tons of urea. The big question is now, will they need to buy more urea before their planting season in April or March, April? Fundamentally, it doesn't look like that's the case, although it is an election year in India this year, and typically on election years we do tend to see some overstocking of urea. So if we saw the Indians return to the market today, we would likely see increases in the cost of urea globally, as it would tighten up the S&D. So that's something we're paying very close attention to. The other issue, or the other thing we're paying close attention to, is Chinese export policy. So the Chinese export policy has been very volatile in terms of, are they exporting tons or are they not? We saw them participate very heavily in an August tender into India last year. After that time period, domestic Chinese urea prices increased substantially above global levels, and as a response to stabilize domestic prices in China, export licenses were cut, and we've seen a dramatic cut in Chinese exports. Our general expectation, the Chinese planting season generally aligns with the North American planting season, so they will be going into peak planting in March, April, May. So our general expectation is that they will continue to keep exports relatively limited to stock domestic urea in that country ahead of peak demand. But once we get into the second half of 2024, we would expect the Chinese to return to the export market. Production has been running relatively well, so additional Indian tenders or Southeast Asian demand they would likely support in the second half of this year. If the Chinese started to export more product earlier than we expect, that would obviously be net holding all else constant a bearish impact to the urea market globally. Another issue that we're watching closely is developments in the Red Sea. The situation around Houthi pirates hijacking boats off the coast of Yemen. Right now, we're seeing some vessel diversions away from the Suez and around the Horn of Africa, although there are still boats transiting the Suez. Generally, the market is aware of this, and I think risk has been priced in to the fertilizer markets. When we look at the vessel freight market, we're seeing less volatility or perhaps less concern, and so that is a reason to at least that's a reason to moderate our concern for this issue, but I want to be very clear that if we saw a significant escalation where boats would no longer transit that waterway, it would add significant premiums to bringing product from east to the Suez to west or vice versa. That could add some near-term issues. Generally, when issues like that occur, trade flows do adjust, but they only adjust after periods of spike of volatility and price. So those are really the issues we're looking at in urea globally. In the U.S., obviously, U.S. and Canada, we saw very low ending stocks after the summer fill period that caused significant. We saw very low ending stocks after a significant period of demand this last spring season. The low ending stocks caused some misalignment when prices reset during the summer fill period, meaning that prices did not align the low supply with the high demand, and so we saw a relief rally as we entered through into September and October. Since end of November, prices have been precipitously declining, although we have seen some demand step forward in Southeast Asian markets in the last week or so. That's causing a short, or at least for now, a short or smaller rally to the in price levels. The big question is will U.S. Or will North American and European demand, will demand in the West step in before prices have time to drop again? And obviously, so if right now we're seeing this demand step up in Southeast Asia, if the European and North American markets came to life today and we added that demand on top, we would expect a firm and firming market on urea. The question is if that demand is delayed through to, say, beginning of March, we could see some declines as demand starts to slow down again after this brief rally in Southeast Asia the last week. So those are the things we're watching internationally and domestically.
That's a great summary. Going back to India, I know on the pulse market, pea and lentil market side of things, we're paying close attention to that Indian election as well, as that has to do with pulse market access, large demand there. It's interesting that it also affects potentially our fertilizer market here in Canada heading into the 24 growing season, with, I guess, the Modi government and the farmer lobby being so powerful in that country. What about, you talked about some of the supply-demand issues that unfolded last summer here in North America. In terms of fall fertilizer application, we had a wide open fall, and it seemed like a lot of nitrogen fertilizer anecdotally went down in fall for the 24 growing season. Have you noticed that in terms of the supply chain, and how does that affect things heading into spring?
Yeah, so again, nitrogen prices reset to a relatively affordable level, and so especially on ammonia, we saw what we feel a large chunk of ammonia went down this last fall, given the optimal conditions and a relatively affordable price. So we do expect that to take away from some spring urea demand. We've also seen just the price spreads on these products trade a little bit more normally than last year. Last year we had elevated premiums on ammonia and elevated premiums on UAN relative to urea, and that really pushed a lot of consumers to switch products to consuming urea for savings per pound of nitrogen. This year those spreads are priced more correctly, and so I would expect more conventional application of products compared to last year. So we should, given that it's likely that we don't see such a robust demand situation on urea going into spring as last year, because some of that demand has switched back to UAN and ammonia, and part of that reason is that ammonia application season was fairly robust this fall.
Was that more of a Western Canada story, or is that a North America-wide type of story in terms of urea or ammonia application in fall?
I think that's particularly a Western Canada story in Northern Plains. So the fringe acres of urea demand in the U.S. are your Northern Plain acres. Those switch in and out of ammonia, and obviously they also had a very healthy run on ammonia. So the northern part of the U.S. and Canada would be where that predominantly lies.
You mentioned the Red Sea situation that's unfolding, and continue to be new ships being attacked the last couple of days. It is what we're hearing in the news. Is that more of a phosphate issue than a nitrogen issue in terms of a lot of the world's phosphate supply coming from North Africa, or maybe segue into what we're seeing in the phosphate market globally right now?
Yeah, I would say that the Red Sea issue could impact all products, right? We see a lot of fertilizer transit both back and forth through the Suez, and if we saw disruptions there, trade flows would need to adjust, and again, that would probably cause some period of volatility. Also, you're just adding, you still can transit east to west or west to east going around the Horn of Africa, but you're adding, 20, 25 days of sail time, which obviously adds not significant, but it adds vessel costs vessel freight costs to the market as well. So I would say it affects all products. In the phosphate market, we're seeing relatively low warehouse inventory levels in Western Canada. We do have lots of time to catch those inventory levels back up with where we need to be for spring. But supply has been a bit of a concern. Generally, prices seem relatively firm given the supply situation, so we don't expect large depreciation in the phosphate market going into spring. We get into the back half of this year, into July and August. I think we could see some downward pressure on phosphate pricing, and that's predominantly to do with the input costs associated with ammoniized phosphate. You're talking about sulfuric acid and ammonia, and both those products, like we've talked about, have seen declines. So.
We've got more with Noah Bishop of ADM coming up here on RealAg on the weekend. You're listening to 650 CKOM and 980 CGME.
I'm Lindsay Smith from RealAgriculture.com. Join me Monday nights for The Agronomist, a 1-hour live and interactive show broadcast across YouTube, Facebook, and X. Monday nights at 8 p.m. Eastern, I host expert agronomists from all over the country to give you answers to some of the toughest agronomic questions. Join us live or catch the replay Tuesday morning. That's The Agronomist with me, Lindsay Smith, Monday nights live at 8 p.m. Eastern.
Hi, I'm Bernard Tobin, host of the Soybean School on RealAgriculture.com. Throughout the year, on the Soybean School, we'll bring you timely agronomic video content from planting to harvest, from the latest agronomic research to the latest in production technology. Check out our massive video library on YouTube, RealAgriculture.com, or download the audio podcast versions wherever you get your podcasts. The Soybean School is brought to you by Pride Seeds, BASF, and Syngenta Canada.
We're going to continue our conversation with Noah Bishop of ADM on the fertilizer markets. But first, I want to tell you about Co-op. Co-op knows your community because we live here too in Saskatchewan. Our teams are your trusted partners with a range of expertise to help support your entire farm operation. Co-op. Here for your farm, here for your family. Learn more by going to co-op.crs/farm. Or Google Co-op. Might be easier, but big thanks to Co-op for supporting RealAg on the weekend. Let's continue the conversation with Noah Bishop of ADM talking fertilizer markets.
Well, why don't we transition right into sulfur as well then?
Sure, yeah. So ammonium sulfate is an interesting market because we had relatively high ammonia prices after when urea prices rallied after summer fill, ammonia prices followed. Right, and we saw relatively high ammonia prices compared to ammonium sulfate prices. So a lot of these U.S. producers were put in a situation where market price was not high enough to basically cost of production exceeded market price, and so we saw plant shutdowns. Generally, we view that as a tightening of the S&D across the U.S., and so the supply situation for ammonium sulfate in the U.S. today is tighter than normal. That has broadly been priced into the product now, but given that you can't catch up for lost production, we do expect the market to be relatively firm on that product. Canadian ammonium sulfate production seems to have fared better, but obviously the Canadian market can only become so large of a discount before those Canadian producers will look for export opportunities into our premium U.S. market. So generally across the board, the ammonium sulfate market, although it does look a little bit expensive today, we're playing catch up for high ammonia costs, and we don't really see significant precipitous declines in that product.
Finally, then, Noah, where are we at in the potash market heading into, if we're going through NPK and NPS and K, I guess, in that order here? Where are things at in the market for potash?
So potash market is stabilized, right? The concerns around Belarusian exports, the concerns around cost of production, these concerns that we had and elevated demand and supply situations in 2021, 2022, they've alleviated. The high prices did kill demand. It's not a surprise. So prices have had to fall to spur new demand. We are seeing demand at these price levels. I do feel we've met a price where supply and demand are meeting. Generally speaking, we will be butting up against cost of production at some mines if we drop significantly further, and so that seems unlikely. On the flip side, a significant rally back up to the highs that we saw in 2021, 2022 seems unlikely as well, given we've ran the experiment of what that does to demand. So the general bias on potash is we've just gone through, we've seen fill prices released, we've seen a little bit of a reset after the false application season in the U.S. These seem like relatively affordable levels for potash. We see, relatively little price appreciation in the near term. Likely we'll see some seasonal price appreciation once we get into spring, and so that's a product that you can be a little bit laissez-faire on if you wanted to wait 2, 3, 4, 5 weeks to lock that in. I don't think you're going to run into major issues. On the flip side, if you bought that product today, I don't think you'd be necessarily unhappy with your position when it comes to springtime.
In general, we've seen commodity prices, of course, come down from the highs of a year or two ago. Is canola, for example, a year ago you could sell at some point around $18 a bushel at the farm gate. Now it's $13 for the nearby month. How has that affected overall demand for fertilizer? Are you seeing an impact in terms of those tightening margins? I know in your presentation here you talked about fertilizer pricing in the context of profitability at the farm level as well. How are you seeing that relationship affect fertilizer pricing at all?
I think we're running that experiment now in Western Canada, right? These lower crop commodity prices are relatively new, and like I said, we're seeing some friction on the fertilizer side that we're maybe seeing some mismatch in fertilizer prices relative to crop commodity because there's other factors that go into pricing fertilizer. So I think generally we're running that experiment. The biggest driver when we look at crop commodity prices on, say, something like nitrogen consumption is corn, right? So corn is the behemoth in terms of farm profitability and nitrogen consumption in the U.S. and obviously fringe acres in Canada. And corn prices, although they have declined significantly, are still above the 10-year average levels. They're still relatively high. So I don't think we're going to see any major demand destruction at current nitrogen levels relative to corn. Obviously, the situation for the Canadian farmer relative to canola prices differs. But again, ultimately, I think we're running that experiment, and it's to be determined.
Thanks for your insight into everything happening in the fertilizer market today, Noah.
Yeah, awesome. Thanks for your time.
That was Kelvin Heppner's discussion with Noah Bishop of ADM about the fertilizer markets. And speaking of Kelvin Heppner, look who's joining us here on RealAg on the weekend. Hello there, Kelvin.
Hello, Shaun. Good to be here.
Okay, so you did that interview with Noah. I guess what's your takeaway from what you discussed with him?
I think in many ways it's that we can kind of expect things to be fairly flat heading into planting season, unless there are some surprises. Like he talked about a few factors that could drive the market higher if India comes back into the market for urea, for example. But in general, not kind of quieter times maybe in the fertilizer market than we've seen the last 2-3 years with the big run up in natural gas in Europe and all of that. Like he said, now the world is focusing on several other factors, but maybe none quite as significant as that one was.
I don't think farmers are going to argue against some stability, really.
No, exactly. And of course, if oil prices all of a sudden spike, we haven't seen that happen with the Red Sea situation that he talked about. There's always chance for volatility, but right now, yeah, it kind of sounded like, and of course he's talking about it from a company that's marketing fertilizer, selling fertilizer perspective as well. So, but the idea of locking in prices now because they aren't going to drop heading into spring makes a lot of sense to me.
Well, yeah, but if we do see the commodity markets continue to drift lower,
yeah.
Those fertilizer prices should follow. It may not be immediate, but they should follow.
Yeah, and that's kind of what I was trying to get at with the last question I asked him about demand destruction and whether he's seeing any evidence of that yet, and not really, it sounds like. And I guess the slide in commodity prices, particularly corn, which drives, of course, much of what happens in the fertilizer market, that demand hasn't. Prices have slid, but I think that lag hasn't taken effect yet, so I'm not sure that will notice that in time for putting nutrients in the ground for the upcoming crop year.
Yeah, the American farmer plants like 5 million more acres of soybeans. That would have an impact on demand. Not saying that's what's going to happen, but
yeah. like he said, and there's a lot of different factors here. We kind of talked about some of the more global factors, not the North American logistics factors, but I think we're in fairly decent shape in terms of a supply chain heading into spring. Like he said, there was a lot of nitrogen, ammonia that went down in the Northern Plains and here in the prairies over in the fall months with the wide open fall, dry fall conditions that we had. A lot of ammonia went down. So I think we're in fairly good shape supply chain wise heading into the spring.
Okay, Kelvin, thanks a lot for joining us. Really appreciate it, man.
Thanks. Good to be here. Have a good weekend.
That was great stuff. Okay, if you have any feedback here on RealAg on the weekend, you can email me, shaney@realagriculture.com. Enjoy the football this weekend, everybody. The Riders weren't that great this year. Hopefully the football on Sunday's a bit better. Bit of a jab there. I'm sorry. Everybody, thanks so much for getting real and getting connected with RealAg on the weekend. Cheers, everybody.